Good morning, officially. Happy Sunday, everybody. Welcome out. Welcome out to the Option Income Launchpad Sunday Market Insights. This is the day. Normally, like the favorite day. Today, it's like, oh, what are we going to see? What's going to happen? I actually thought we would have had more people here today, but I think sometimes it's easier to be like, you know what? Maybe I'll just listen to the recording. Okay, that's fair. My name is Scott. I'll be your host. Let's get going. As always, education, illustrative purposes only. Nothing we do or say should be intended as a recommendation to buy or sell any security or financial product. Any decision made should be at your own risk because we're not brokers, we're not advisors, and we don't give investment recommendations of any kind. Our agenda is to posture the market, analyze the 6 components, see what's better, what's worse, what direction things are trending, what are our concerns, and at the end of it, where does it leave us? We are going to take a look at the economic calendar, though the economic calendar is in and of itself unreliable. The government shutdown continues. The data that we think we're going to get, and it is important data this week, CPI, PPI, inflationary data, is on hold. I would expect. It says it's possibly going to be pushed. But I would say most likely will. And even if they open, I don't think there's time. I think they'll still push it back. I just don't think that there's enough time to get it done. So there's that. I was just thinking to myself about tomorrow. Tomorrow markets are normal, right? The equity and options markets are open, but the bond markets are closed. Does that sound right? Maybe someone can do a quick Google market holiday. It is Indigenous Peoples Day, but I didn't make any adjustments because I'm like, oh, the market's open on that day. But then all of a sudden I panicked. I'm pretty sure, but I need to verify. I'm pretty sure equity and options are normal hours and the bond market is closed for a holiday. Anyway, so business as usual for us first thing tomorrow morning. And Columbus, is it still Columbus Day? I didn't know if it's, do we call it Columbus Day, Indigenous People Day? Is it a combo and everybody gets to party? I don't even know. But tomorrow is technically a banking holiday, I believe. But markets should still be good. Calendar has both. Okay, John, fair. Confusion for all of us. Hey, Vladimir, good to see you. Okay, so economic calendar is inconsistent, we'll say. Unreliable this week. Press, that's right, exactly. I'm old and call it a work day as well. The stock market is open on Columbus Day, but the bond market will be closed. Oh, look at that. Look at me remembering. I'm not losing my mind yet. Probably. Thank you, Graylin. Only the bond markets. We don't care about the bond markets, really, where we are. Let's build an early week opportunity list. Was it nasty on Friday? Yes. Does that mean things have reversed? No. No, we'll figure it out. I think, and here's what's interesting is our market posture. We'll talk about our building an opportunity list, and we'll talk about record keeping and analytics. Last week was record keeping. This week is analytics. The reason I wanted to hurry through that was because our posture's been 5.25, 5.5 for quite a while. We've been taking bullish trades still in the right areas, I believe. But the overall aura of the market has been enough, right? It's the conditions have maintained stability as we look at the core areas we consider to help assess market conditions, and they've stayed the same. And yet we've been having this conversation that's like, well, it feels kind of weird. It's not. And I said, well, okay, this is how I see it. Is what I have done as a result is I've reduced risk and positions, a little bit more discriminate with the trades. And so I feel like even though the market posture hasn't dropped yet, adjustments have already been made. Is that true? Do you guys feel the same? Right? Because posture, we're not blind. We're not blind to, the fact that other things are happening and there's concerns, and we discuss them, and we're like, hey, what will it look like if they start to ramp up? And we saw it on Friday. Maybe we need to add a new category, Trump temperament. Is there a temper tantrum happening? Trump signed an executive order. Oh, well, at least he put an executive order on it. I gotta say, there should be some. Otherwise, we just go from sweeping executive orders to sweeping executive orders, and there's such a instability in governmental. I don't know. It's not effective. It doesn't feel effective to me. But what do I know? I'm no politician. Okay. Wait a second. Today is oh, yeah, okay. Here's October 5th, and this was at the end of the week what I projected to be for this week. Okay, fair. Yeah, I've got a pretty big prediction dropping to the downside. So, if we could elect the right Congress, gosh, I mean, throw them all out and start over, I say. Again, if you ask me, I like Warren Buffett's idea where you have some basic mechanisms like balanced budget. No balanced budget, you're not eligible. You're not eligible to for re-election, right? And then, do something like, hey, whatever the average American receives for healthcare, that's what Congress gets. You get what the average American gets, and watch healthcare benefits get better. Right? Put some term limits on, squash the entire lobby industry, and our country will be better for it. So anyway, I have some ideas. I think public floggings would be useful for Congress. Is that a thing? Has it ever been? I think it should be. Public floggings would really help motivate government. That's where we need to go. Corporal punishment. Tony's on board with that one. He's like, oh yeah, pay for tickets. It would be amazing. We don't need tariff revenue. We could have tickets to watch public officials getting flogged. I would absolutely pay good money for that show. Okay. Oh, don't get me started. Let's go posture this thing. Oh no, did I? I just checked it too, you guys. I just checked it. What is going on? Reconnecting. All right. I swear it doesn't matter what I do. Whatever server I'm on for Thinkorswim, the Sunday morning updates just always mess with me in a way that is super frustrating. It doesn't matter what I do. All right. You can see what happened here. Unfortunately, can't change the setting until I reload Thinkorswim. So don't worry, we'll bounce around to the other things. We'll make sure that we have a good peek. Let's get this twice. Okay, there we go. Let's see if one of those will get us going here. Thinkorswim, embarrassing me in front of my friends. Let's go talk about sector rotation. Take a look at the FinViz futures page for Friday's relative performance. Yeah, I can pull up FinViz. Finviz.com. I feel like nothing's working well on Sunday. Is this all the way over? I'm starting over. Come on. Okay, there's gonna be major market. There's gonna be sector rotation. Oh man, nothing's working here today. FinViz futures. I don't want your ad about NVIDIA stocks. One day performance. The VIX really did well. The VIX did quite well. The Nikkei got crushed. That's the Japanese market. Your Thinkorswim isn't working either, Bob Roland. I mean, don't they know we have Sunday work to do? None of my pages want to work right. This is catastrophic. Wait. Something's coming here. Tony says his is working. Yeah, it's I tell you, they're like different servers have different updates throughout the weekend. Tony's on a good one apparently. Oh, here we go. At least getting some charts up. All right, we're back in business. We're back in business. Let's talk about it. What's happening? Everything fell on Friday. So you can see we're still NASDAQ on top. S&P second. Russell's in third still, no matter even with the drop. And the Dow still dropping. So this was lockstep. This doesn't show some sort of a it doesn't show a shift in the way that the market is aligning. It shows a continuation in the way that it was aligning, right? Everything fell. Now, did the Dow fall less? Well, yeah, that's what it tends to do. You can see, these dropped 4% and this only dropped 1.5%. So that's nothing that's like, oh, well, that's normal. Right? There you go, Stephen. Does not show abnormality. So that seems just fine. Oh, hello, buddy. Good to see you. I'll move this over here so no one tries to watch the keystrokes and steal my password. Yeah, I'm watching you guys. Okay. Number 2. Let's go to 133. What's going on? More of the same. The Russell holds its leading position. That's the thing that we don't score like how high are they? We score where are they relative to each other. First, still second, still leading, still the watermark, still lagging. No change on the 133, right? I'm not going to drop my score from a 1 because the market dropped. That's not what I'm scoring. I'm scoring the market's appetite for risk as expressed through the way that these interact with each other, right? Let's go down to 66 days. What do we have? More of the same. NASDAQ, even after the drop, still on top. Russell, after the drop, still on top. S&P, still the watermark. Dow, still lagging by approximately the same levels. There's really not much of a shift, right? And so as far as this goes, I'm going to say everything seems fine. I'm not going to change. I actually, as I scored this possibly to a 4, as I scored it to a possible 4, part of that was this thing may drop 1/4 of a point. It didn't. It held. So I'm leaning more towards 4.25 now. I think 4.25 is where I'm going to end up. Possibly now at this point. Steven agrees, kept his score at 1. Anybody else want to weigh in? No change for Steve C. Love it. The Steves both held fast. Good. Okay. Any concerns? Well, we don't know yet. Let's go look. Press is waiting patiently. Let's go look at the 22-day. That's where the concerns are likely to show up. Yeah, there's a concern. The NASDAQ still on top, even after the drop. Press needs it 22 hours. Like, give me a fix. The Russell was on top. The Russell dropped just barely back below. It did not hold its leading position here. Is that enough to drop my score? No, because I wasn't thinking about it before. If I had been thinking about it before, then I see it here. Then I might be like, okay, yeah, you know what? But this is just an early sign. An early sign doesn't necessarily mean a sign. It's close. It's concerning that the Russell fell out like that. The 22-hour does seem like it would be pretty relevant right now, you guys. I'm not gonna lie. Yeah. Okay. I think we're all in agreement here. Looks like we see it fairly similarly. If you did take it down a notch, I wouldn't be like, what? Why would you do that? I'd be like, okay, all right. I mean, it's, it's got to look pretty strong to maintain that 1 score. I think it did enough. That's where I am. Okay. Did this? Oh, it sure did. We're ready when it's time. Let's drop. Let's go ahead and while we're here, let's go ahead and do back-to-back relative strength analysis. So let's go ahead and analyze this one as well. And you can see here what happened. Technology dropped pretty hard. Utilities stayed at the top. We can see that already. So I do think that we can't just ignore utilities and be like, oh, well, crypto and AI need a lot of electricity. So no, we recognize that. We see it for what it is, but we also have to then be able to discern at what point do we think, you know what, that's actually more of a problem now. So let's keep that in mind. Communication services, the hybrid bull, exactly. Dropped out a bit. Still in a good spot overall. So is industrials, dropped out, but still kind of in a leading spot. We have financials dropping, of course. We have energy dropping. Here's discretionary. Discretionary was trying to move back into position and really sort of took a hit. Those staples. So what I want you to notice about staples is it didn't rise, but it also didn't fall. It went sideways. So that's posturing potentially for defensiveness. Yeah, we'll see what this one does. Let's drop it to 133. I'm super curious. At 133, all we have is technology. Communication services dipped, and it's down with lockstep with the market. Industrials and discretionary dipped, and they're below now. Utilities held up just underneath. Financials towards the bottom. Energy's the worst on this time frame. Okay. It's hard to have that good of a score with only one sector up there. Yeah. Technology, it's still holding up overall. And on the 66-day, what do we have? We have technology still in a leading position, but it dropped hard and fast below utilities. Utilities is holding up. When utility holds up like this, that to me is saying, oh, that feels more defensive than growth. I don't feel like, hey, look, utilities is going to be the new growth sector that leads the way. Yeah, making some accommodations for a bit of shift in the overall is one thing. But just explaining it away is another. So this to me is a bit concerning. You'll notice communication services ever so slightly held up above, but barely. At this point, I'm going to say I still have technology, but it dropped hard. And with utilities there, I am dropping mine from a half to a quarter. Half to a quarter. And that's not like hugely problematic. If you notice back in August, we were 5 1/4 and we had a 0.25 back then, which is basically like, hey, now if technology continues to fall and we see any other hint of defensiveness pop in, I'll move it to a 0, right? Still has some look of bullishness. But yeah, the money flow from institutions definitely seems to be drying up as far as moving into growth areas of the market. Steven says he agrees. Back to a 2.5. Yep. I think that makes sense. Okay. All right. Well, I think we're in a pretty good place. Let's go look at the 22-day and just kind of see what's coming down the pike. And we have utilities on top, followed by technology, followed by healthcare. That's not a good mix for a 22-day. That is definitely showing more of an orientation towards neutrality, possibly even defensiveness. Discretionary dropped out. Industrials looked like it wanted to try it, dropped out. And then you look here and you can see Staples is kind of holding up. If that pops in there, it's looking a little bit more dire. So that's where I am. I've dropped that to 1/4 of a point. Let's now go to the SPY, which is waiting for us. Despite the barrage of emails the past few weeks warning of looming signs of a correction, Friday snapback appears to me to be very... Yeah, I'm not... I mean, look, it's not overly concerning yet. This is the biggest thing we've seen since, tariff reveal party time. Which, interestingly, was motivated by more tariff reveal parties on Friday. So, interesting. It could be one of these. It's just bam, and then just it's like, oh, you know what? It turns out they're not going to do something. It could be one of these where it drops for a little bit and tries to make its next move, right? So, we don't know. We don't know what it's going to be. We're just saying that it definitely had been moving up for a while. Chalkin thinks it's the end of the world with a market crash. I mean, I don't think we need to doom and gloom so much yet. This is fine. In fact, for me, it could pull all the way back to here and I'd still be thinking of it as a long-term trend, much like, these things happened here. My preference is if it can stabilize near this, that would be best. That would be the strongest bull sign. All we can do is wait and watch at this point. This is not going to shift our score. In fact, we were saying if it gets up to here, we're going to raise the score. It never did that, so I'm going to leave it where it is. I'd like it to not break too far below. If it breaks below, let's just kind of draw something along here, almost like this. I'm thinking about that line there. Not the red one, but the red slope a little bit lower. If it holds up, breaking the red line is not a problem for me, but if it breaks below that slightly lower one, then if it got into this area, then I'd probably take it to a 1. And then I'd say, all right, let's see if that holds up. I don't see any long-term problems. I think it's fine. So I'm going to leave my score the same. I'm going to leave my score the same at 1 1/4. Okay, let's go down to this chart here. Yeah. This one to me was kind of problematic. Let me show you why. Let me tell you why. Because we had been moving along on this clip for quite a while, even going back all the way to here, right? No matter what, you can find that. And you can see we kind of smashed through that upsloping line there. Am I like, oh, the trend is reversing, what are we going to do? No, but it broke that support. It broke that support. Therefore, I'm going to drop this to a 1. It's still a 1, but it broke support. Now, whoops, I keep doing the wrong thing here. I keep doing the wrong. Now, if it stabilizes and then it starts to turn back up, then we can reevaluate. But for now, it broke support. That's problematic. It gets a demerit. It loses a quarter of a point. That just makes sense. So, down a quarter of a point. Let's go to the 1 month daily. And let's look at our volume. We can throw this one out. That's our last tie. I have 1, 2, 3, 4 ties now. I have 4 ties. I have 1 buy and I have 2 sells, and the sells are a little bit more. So it is a 2, 1, 4. If it was a 1, 1, 4, it's a tie, and the tie goes to the buyers. So a 2, 1, 4 has to be worse. This is 0. I'm going to give it a 0. That's my score. If we get to next week, 1, 2, 3, 4, 5, and this B is sitting here, it's going to get discounted. And if nothing else changes between now and then, and it becomes 2-0, and this would probably become 2, right? Yeah, this would still be not great, but it would still be, 2 sells, no buys, 2 ties. That would take us to a minus 0.25 if we see that. Right? So the way it stands, I am lowering my score because my score is currently at a quarter of a point. That's going to drop to a 0. So there you go. We've lost a half a point already. Major market stayed the same. Sector rotation dropped a quarter of a point. Now, line of sanity. Oh, it's not a great line of sanity. Whoop. Yeah. Now, actually all of the action occurred above the line of sanity, which tells us that we dipped late in the session, but we're a 0 and our line is ever so slightly tilting down. I think that makes sense. And if it stays like this, if we don't see any improvement, or if it even drifts a little lower, our score will drop to a minus 0.25. I think that makes sense, right? It's not like there's this huge takeover of sellers, at least not yet. It's just one day. One day of the market responding to news. It's just not a good time, right? To escalate the trade war when we're in a government shutdown. We're not getting data about markets. We're expecting the Fed to make decisions, as we're supposedly hearing it's one of the greatest economies ever. It doesn't feel like that to me. Am I wrong? Okay. Let's keep going. Let's jump now to the VIX because we've already done our other analyses. The biggest performer of the day on Friday. But at the end of the day, you'll notice we kind of are in this vein here. These highs from June, these highs from July. So is this disqualifying? We're like, oh, that's it. The VIX is about to just fall apart, blah, blah, blah. Check my day. No, I usually do 6 months daily. 1 year is a lot. You'll see a ton of data here, right? I mean, we don't necessarily need all of this back here. If it's contextually helpful, maybe. My default tends to be 6 months daily. So I want you to notice that this one was the highest by far. And this one got a little bit higher only during the day. But for the most part, We're right around the same level as these. We took out this previous high. That's a minus quarter of a point. And I missed this. That got scored as a lower high right there. And then literally the next day, it kind of turned. By this point, it should have been assessed as a higher low. Whether you put on a hedge of any kind or anything like that, let me know. Since inception, I've been using 1 year daily. No, I always go back. You can go look. I always go back and watch last Sunday's video. I always use 6 months. That just tends to be my short-term perspective. It shouldn't change anything. In fact, if you start with the 1 year, I would imagine you zoom in because you're like, oh, I got to see this a little more clearly now that I'm focusing on, right? You'll notice that none of this back here is coming into bear. We don't really care. We care about what's going on in this last little bit of an area. So even if you used a 1 year daily, you would definitely zoom in. There's nothing in that context, I think, that would be missed from what we're looking at. So no, I mean, you're fine to keep doing it if you've developed a preference for it that way. But no, I score the 6 month daily. So I have to minus a 0.25 there. That's on me. That may have led to a different perspective. Probably not. Might have actually triggered more of a hedge than we got. Is anyone in a hedge right now? I wouldn't be surprised if anyone says, yeah, I've got some puts on for a hedge. El Jago does. I do. I mean, hedging is an important piece of risk management. So this is a late score that is correcting what should have been done. This is the new score. 1, 2, 3, 4, 5. Yeah, I think right through here it could have been scored the prior week. It was tough because it was still in a triangle. So I'm not saying like, oh man, that was obvious and we all missed it. I'm saying it was subtle. We've talked about how difficult the VIX has been to analyze, and now as we look at it, it's easier to go back. Yes, there's absolutely some hindsight bias at play in this circumstance, but I'm fine with that. So what's the net result? Dropping a half a point. That's where I am. Dropping a half of a point. Where are you? Market posture. That's going to drop down to a 0.75. Not 0.78, though I could. 0.75. So there you go. The major market was the one that I'm like, I'm not sure about that. But the rest of it, dropped. What's my go-to for a hedge? 5 weeks out of the money, 5%. No, 5 weeks out in time, 5% out of the money. Puts on the SPY is my pretty standard go-to. So at any given time, I'll be like, all right, here we are. I'm going to multiply the SPY by 0.95. That's the strike price I'm looking for. I'm going to go approximately 34 to 37 days out. Usually you'll be able to find something in that range. That's the expiration. And then I go and I look and buy those puts. So, yeah. Great question. Okay. Pretty good pretty good prediction there. Dropping down to the 4.25, a little bit nasty. That's a big enough drop, right? Anything over 1 point is big enough for us to say, hey, let's be more careful. The next step we take into the market. Do I manage a hedge differently? Yeah. So, I mean, I like to have a little bit of early profit taking. So if I catch something like a big move in the right direction, I'll take some profit off the table. And then I like to have the ability to have 2 more exits. So I like to have the ability for 3 exits when I do a hedge. It doesn't have to be increments of 3. It doesn't have to be like you have to have 3 or 6 or 9 contracts. If I have 5 contracts, I might be like, all right, I'm going to sell 2 of them at the first level, take some gain, feel pretty, then carry the rest. Then I'm going to try to lock in 2 more at a 5% drop. And then I'll push the last piece to see if I can hold on to it for something that may, end up at a corrective level. So slightly differently, yes. I wait for not just price but also VIX confirmation to close the hedge. Things like that. Did the question, Bob and Tony? Do you feel good about the answer? That little formula. What that does is anytime I hedge, I feel like I'm looking at something standard so I can assess how well is it priced, right? I mean, I've gotten that for as cheap as $1.75. Lately, it's been like $3. So, okay, let's get to the watch list. Let's get to the watch list. Sorry, I need my... list here. Okay. Okay. This is 10:12. I'm going to give myself room just in case. Let's go to the watch list and see, are there opportunities that we think we would trade? Number of contracts relative to number of positions. Yeah. That's exactly right, Press. So it's not like I'm looking at a 1-for-1 or, I mean, I would even say more like 4 or 5 to 1, like one level of one contract, one trade of risk for every 4 or 5 trades you have on. So if I had like 8 or 10 trades and I'm like, oh, I think I need to hedge, I would actually make that a pretty big hedge. It would be like bigger than normal. But if I had like 4 or 5 trades on, I'm like, I think I want to hedge here. I'm going to take one measure of risk for those puts. That's a tough one because there's so many fluctuations. I should see if I can't, try to find a better formula for that. But yeah, you're right. I mean, that's a tough thing. I think you may find a little bit of trial and error where you're like, you know what, that last hedge I did, it just didn't hold up as well. I need to do a little more next time, right? Or you might say, oof, this hedge was a little too big. I think I had too much on, because when you shut down trades quickly, if you're hedging, you're probably also prone to a fast hedge or a fast close, right? Where you're like, hey, these bullish trades, I don't expect them to last much longer. If I'm hedging, I'm thinking things are setting up for something a little bit funky. Let's be ready to shut down any existing trades. So as you're shutting them down, the hedge has more and more impact, right? If I had 5 trades and then the next Monday I shut 3 of them down, now all of a sudden I have two remaining bulls and 1 hedge, which that hedge is much bigger than it used to be. So that's what becomes, an interesting element of the equation. Good questions today. Oh, let's go look at the carnage. Apple. I actually still like Apple. It's still on my list. Apple's above its 50. It's above its old resistance level. If it comes down and stabilizes, I would definitely give it a shot. ADM as a defensive trade, and we probably should do on Tuesday evening, if someone will remind me. We should probably do some searching through consumer staples, maybe healthcare. I would imagine that XLU is a prominent candidate on this week's, but ADM broke its consolidation up, down. Anything in there is viable to me. So, yeah, why not? Amazon is a no. It failed. It failed to hold up. It's barely hanging on below the 50. ANET, yes. ANET just made new highs. ANET, if you had any left, might have made you some money. So I would say that still looks viable. APH. I'm going to leave APH on my list as well. It turns sideways here, but if it doesn't break the 50, I would probably say like right through there is a level that if that can hold up, I'm a maybe. AVGO, no. AXP, no. And just like that, the financials. We're going to watch. We're going to see what happens as we get closer to earnings, but none of those held up. No for BAC, no for Citi. Caterpillar is a yes. Let's see if Caterpillar can help lead industrials. CCJ, I don't know. CLS, I don't know about those two. They're maybes. They're holding up. Yeah, I'll leave them on the list. I'll leave both of those on the list. Capital One is a no. Coinbase still looks okay. Now, Coinbase hit its target and was at its target for like 4 days in a row. I hope that you were able to lock in. Like it should have been a healthy chunk, 80-90% of the credit or of the maximum gain. I still think it looks okay. If it holds up above its old resistance as new support right near that 50, let's see if we can't get another little run. Cisco. Ooh, Cisco. Same kind of thing. It like tried and failed and then tried and then it sort of got there. I'm gonna leave it on the list. I'm gonna see if it can recover above the 50. If it breaks below the 50 in this low here, then it's all bets are off, right? It doesn't have a lot of wiggle room. Delta broke the consolidation on its earnings. If it can hold above the 50, then let's think about it. Let's not be too harsh. DoorDash still looks fine. Looks like a couple of heavy selling days, but this is coming off a new high, 52-week high. Diamonds pulling back. DocuSign, no. In fact, DocuSign's like, hey, if this breaks one way, we may think about a downside trade there. EA, there's nothing there. It's just sitting. Ford, feels a little too far for me. All the way back to these lows. Kind of feels head and shoulder-ish. I'm going to say no. Futu is a no. Futu's getting kicked off the list at this point. Yeah, sucked us in. Gave us nothing. GE barely hanging on. If you held it, you might think, oh, it's holding support. There's a good chance a good number probably closed and took the loss, understandably. Gold. Yeah, I took a loss on Futu, Bob. Amen. Boo to Futu. You might be thinking, doesn't it owe you money and you should keep it on the list? I'm trying to get better at that. Setting bad examples for revenge trades. Gold. No revenge trades. Gold is on the list. Google. I still am going to keep Google on the list. It's still well above the 50. I don't like that it's breaking this one. I did not trade this one. I watched it and then I said, okay, maybe the hiccup. Clearly not the hiccup, but if it can give me something above the 50, I'm still going to be keeping my eye on that. Goldman is a no. Robinhood, yes. If there is a financial for me, it's Robinhood, it's Coinbase. How Met? If it can hold the 50, I'm going to say still yes. IBM still has some prospects to it. Intel, I don't know about Intel. We'll put it on the list. Government intervention. The Russell, we'll see if it can hold up. Levi's got smashed on their earnings due to tariff problems. Lumentum, let's see if it can hold up. So our watch list doesn't look catastrophic. I mean, we still have plenty of good opportunities. We just need to see some stability come in. LVS is a no. Meta is a no. Morgan Stanley, no. If the earnings weren't so close, I'd say maybe, like if they can hold up. But the fact that we have earnings here, we're just going to have to watch and wait and see. Microsoft is a maybe. I'll still say that's a maybe. I would love to see Microsoft and Apple get their shits together. Press likes Coin and Hood as representations. Yep. Micron, yes. Absolutely. Absolutely to Micron. Netflix, yes, that's a maybe. It's got earnings, though, so be careful with that. Northrop Grumman, yes, but it's got earnings, too, so be careful about that. NVIDIA, still a yes for me. So the chip stocks are still okay. Still holding up to some extent. PGY, no. You're off the list, Pagaya. As much as I like to say Pagaya, it's a no. PLTR, it's a maybe. QQQ. Roblox, I'm a no. Reddit, I'm a no. Rocket Lab, absolutely still looks pretty strong. If any of you took that, I hope you booked some gains and locked it in. Looks like it's maybe ready for a pullback. Silver, SoFi gave back a chunk. Hopefully you locked at least some gain in here before it dropped. If you're still in, you may look for the next. And I would say it overall still looks like it could maintain its bullishness. As long as it doesn't break this low, I would take the next one on that. SPY, Tesla. I'm not putting Tesla on the list, but technically you could. TSM, I will put on the list still. Chip stocks are still holding on. Uber gave back a couple of chunks, but overall the uptrend is still intact. Upwork is a no for me. Visa, I'm actually thinking Visa is probably the strongest of the credits. It broke out of its consolidation. Right here. It broke out. And now, if it can give me a trade through here, I'm a maybe on Visa. Coming back. Walmart. No. Let's go through the XLs real fast and we'll talk about trading plans. Basic Materials got hit pretty hard. Communication Services struggling to hold up. Energy struggling to hold up. Financials, you can see across the board, when we look at these stocks, a lot of things coming down and struggling to hang on. Technology still has its uptrend. Staples haven't really seen much bounce. XLU is on my list as an ETF. I don't have any utility stocks, but I will trade XLU. And I am going to put XLV on my list. I don't have any healthcare stocks right now, but I will trade XLV. And there it is. That's the list. Lastly, but not leastly, we are working on Section 7 now, which is analytics. Here's the good news. If you worked on Section 6, Section 7 just comes to you. You get all this data. You just need to coordinate. We just need to coordinate the timing of it. how often are you going to do your analytics? How often are you going to stop, look at the numbers, and say, "Ooh, what does this tell me?" But you should be doing it at least monthly, maybe bi-weekly if you're trading enough. So plan for that. But yeah, make sure that you get your record keeping in place. And then your record keeping leads to your analytics. Make sure you have a cadence described and defined for your analytical review to make sure that you understand how many winners, how many losers, winning percentage, losing percentage, average win, average loss, reward to risk, expectancy, Kelly. All of that should be starting to influence some of the broader decisions you're making about what adjustments get made to your trading and your trading plans. Whew. All right. It's great to see everybody. We are on for tomorrow as usual. The markets are open for both Columbus and Indigenous Peoples Day, whichever one is being celebrated. And so I will see you guys at 9:15 a.m. Eastern Time so we can transition our market posture to our trading posture. What now? So we'll get to look at the futures, see how the market's responding, what news, etc., etc. It's great to see you all. Have a great rest of your Sunday. I hope the weather's nice and fall where you are. It's a crisp 39 degrees here in Utah. But anyways, all right, you guys, as always, happy trading.